Hi there, traders. This is Brad Gilbert with the FX Market Insight for Tuesday, the 5th of March. All right. Now, just having a look at the major opportunities coming up today. There's a couple of crackers, and it really starts with the Aussie or the RBA interest rate meeting. Right, we're going to get a decision around what they're thinking about interest rates. Now, the RBA has been somewhat dovish, I should say, of late, adding in that an interest rate cut is a possibility. Now, this is where you put everything together, and if you just come into the MyFX Trading Hub page, you're trying to connect the dots here. Now, obviously, looking at the general market, let me just cover this first. Now, market conditions, the majors are just drifting sideways, on a majority sort of framework. Normal market conditions, but the good thing here is we do have the Aussie that does have a downward bias at the moment, technically. And it also has a downward bias fundamentally stemming from primarily the comments from the last week or two from the RBA. So this thing is moving down nicely. So you connect the dots here, you're looking for some sort of weakness on the Aussie, and that could come through the RBA meeting. Now, just bear in mind, there's a few left field events here. The core market drivers are still geopolitical. But this is where the RBA, the central bank, could come in as a major driver for the Aussie. The China-US situation is very touchy-feely, especially with regards to the Aussie and Kiwi as well. So a good outcome for China should see Aussie and Kiwi rally. A bad outcome for China, Aussie and Kiwi fall. So we just got to keep that in the back of your mind as you go through the trading day. Now, so we do have downward bias here. Let me just try and get all these on the one screen. So connecting the dots here, it's pretty easy. As I mentioned, you're looking for the pairs to line up fundamentally and technically. We do have the Aussie in this frame of mind. We've got the biggest key release for the Aussie, which is the RBA interest rate decision and statement. It will come down to the statement. All right. Now, this is where you need to try and get up the curve a little bit with regards how this all fits into play. Now, if you click View All here on the fundamental aspect, you'll come over to the central bank sentiment page, come down, click on the Reserve Bank of Australia, and you'll come over to the Aussie fundamental page, and you can take a look here where we're getting that downward bias on the Aussie fundamentals. So if we go from the RBA being slowly dovish to dovish, which looks like to me we should see the Aussie come off quite aggressively. Right now, at the same time, the market is expecting more dovish comments from the RBA. A lot of the peripheral numbers have been weak. Company profits yesterday weak. The general housing market's falling. We all know that as well. So if there's no further dovish comments from their last statement, then we may see the Aussie sort of rally back to where it was. Now, how can you find that? Well, come up to the RBA page, right? The answers are here. If you come down to the interest rate decisions, come down to their most recent ones, you click on their most recent statement, and you can get a good picture here. Now, for me, I always read the last paragraph first. This is where the answer usually is. It's like a conclusion or a synopsis of everything they've said. And this is where you are looking for them to sort of start talking about potentially cutting. They're saying monetary policy at this unchanged at this meeting would be consistent with sustainable growth. They may have something in there like future changes or adjustments may be needed to stimulate growth or something like that. Then you'll see the Aussie come off, because that is the same as an interest rate cut straight away. If there's no change in this last paragraph, okay, this is where the action, as I said, usually is. You may, they've got some inflation stuff up the top here. If there's no change here, then you may see Aussie rally, because the market is really anticipating a dovish statement from the RBA. No change in rates expected. And you know what? I wouldn't rule it out. I've seen over the years some surprise hikes and cuts from the RBA. I don't think the market has it factored into this stage. I would actually anticipate a cut, because they are going to do it at some stage. Now, if you're in the 247 trade zone, there's already a bit of a thread here on the Aussie cash rate. You can join that conversation as well about what's going on, where to find these links. Now, the most important thing you need to be doing at this stage is actually coming back to your technicals and really tuning up your charts for the opportunity. Now, we've got a resistance line there. See this light blue one? That's a previous support line which was broken. Now that the Aussie has bounced off these lows, we can now actually bring this back into play. And actually, I'll put it on the lowest point. Let me just change that to red because that's going to give us a bit of a target coming into today's data, right? It is only short term, but it focuses on these recent lows that we've had. And if I just sort of shrink that up, you'll see it's not a great trend line. It comes from this low that we saw on the 2nd of January, which was a bit of a glitch. Now, if you're not really into that, the only other trend line that I can see you seeing being valid at this point would be off this low here, and you're probably adjusting that to there. So it's a little bit arbitrary. I've been speaking to a few of the guys in the banks. They are drawing the main one off the bottom, but it would be wise to have a bit of both. And you can actually, you know what, potentially as part of your trade plan, stagger in the position. So maybe a break on the 70.75 gets you into the trade, or a break just below 70.70. Okay, it's only 5 points difference. You're probably looking for the bottom one as a potential entry on the downside. Now, as I said, with the opportunity here, we have a resistance line on the top side. If there's no change in their statement and it's not extra dovish, well, then we may see the Aussie short-term spike. I would expect, though, they are nervous. They've been saying it quite a lot. So I would expect a break on the downside if they do come out with some dovish comments. And that's what I'm expecting. That's what the market's expecting. So hold on to your hat. This could get a little bit exciting as we go through the day. All right, now just coming back to the MyFX Trading Hub, just to have a look here. There are some other releases. Now, the Aussie RBA is the key release. Now, you come out to have a look here through the remainder. There's some big things happening across the board. We do have, well, actually, there's some big things. There's some little things as well. The Swiss CPI and Eurozone retail sales, these are blue data releases, so you can hold positions through these. We just want you to be aware that those releases are coming out. Now, you don't usually get much of an impact, but if there's big variance in these numbers, then it may move around somewhat. To me, the services PMI data and the ISM non-manufacturing data will be their key releases. In particular, the US, the ISM non-manufacturing. The manufacturing numbers out of the US last Friday were weak. If this matches up weak, it may give us a bit of a weak bias on the US dollar, and that may see the other majors rally, right? The other currencies rally. If the data is strong, well, it nullifies last week's numbers, and we're back to sort of still sideways trading on the US dollar. It's going to be quite interesting as we go forward. And then later in the day, we do have the RBA governor and the Bank of England governor speaking there as well. Now, they are the two kings of those currencies, so I would be watching that very closely. All right, so to me, if you're looking to trade today, the Asian session will be very active this afternoon with the RBA. Then you come into Europe, you've got a couple of good releases to keep an eye on. Now, the CPI, as I mentioned, and the Eurozone retail sales, peripheral numbers, but they could impact. Now, Brexit probably overriding the services data, but keep an eye on sterling. It's a bit of a loose cannon at the moment, but you've got to watch the numbers. And there's your ISM number. That's good because it's just one number. And then we've got the central bankers speaking after that. So a busy day all up. To me, the best trading opportunity still at this point, and it's been like this all week, is the Aussie dollar. We've got fundamental direction lower and technicals pointing lower as well. All we need is the RBA to chime in with some weak comments, and then away it goes. All right, guys, that's it from me. Have a good trade day. We'll see you in the 247 trade zone. Cheerio.